Yeah.
things are happening. Like the market has been erratic a little bit, but recently, as of late, it's gone down. But I'd say the past like 7 days, Bitcoin, Ethereum, we've seen some green candles, and money is getting made. Like, Bitcoin is still like 22K, so it's like it dipped from 23 and it's like went down to 21, and it's like kind of like 21.7. And so like Bitcoin and Ethereum, Ethereum also is the same, where it's like it's been hovering around 1500, 1600 to 1500.
Do you have targets, Brian?
I don't have targets right now, but the thing is that Ethereum has been level, but altcoins have been hitting. Like,
Dude, I think
there are plenty of altcoins that in the last
they've been
30
knowing.
to
They've been
60
knowing.
days
Are you willing to
are
roll the dice?
100x. Like, 100%.
Yeah.
Even Urza, our beloved Urza, was,
So the AI
125%.
coins, the AI coins, but the thing is, will there be pullbacks? And this is what's scary. People say bull trap, bear trap.
The Fed rates are still raising rates, so it's like there's no.
And then
economic
ChatGPT is
change.
saying that there's going to be a recession.
Yeah, so the thing is that there's money to be made. There's still a bunch of altcoins making money.
It's
Atom,
a
L1, Arbitrum plays. Um, there are coins that have 100% returns within the last 30 to 60 days. So even though Ethereum and Bitcoin have kind of been even level or just kind of tethering to certain range points, people are still making money in this bear market.
So there's like a chop, but some of the stuff that I wanted to discuss about during this podcast was like some of the technical aspects of trading. And there's a lot of factors that go into trading versus just, do you like this or not? And so, as always, not financial advice, not legal advice, but
it's a strategy for sure.
The people that trade that are buying and selling often, especially in crypto, sometimes you can get eaten up by the feeds. Like if you're just too finicky and you're selling and buying and tweaking out all the time, it's not really the way to do it. But if you set certain parameters, there are traders who are like, hey, I did a leveraged long and off of a 10% increase, things are just going up and down. But if ETH stays in the 1,500 to 2,000 range, then you can do leveraged longs and you can do calls and you can make money.
Yeah.
But the weird thing about this is the idea of like volatility as well as volume. And then what these other factors really tell you about is that there are people with a lot more money than you. And so if you do a leverage, they might move the market. But if you're not degened, if it's just crabbing where it's really not going way high or way low, but that's why people talk about the volatility of Bitcoin, because it just goes up and down.
You can steal some. You can say like,
if someone is like leveraged to 100%,
like the underdog can steal a game or two.
So they always talked about, was it Justin Sun?
With Tron?
Where he had a giant leverage long on Bitcoin, and then if the bears could liquidate him,
he got wiped out, but there was a waiting line. So he was like 69 on the waiting line to get liquidated, and so he had that time to get himself in the clear to not get liquidated.
And so they don't just liquidate you, but the idea
There's
is
a waiting line.
You're borrowing a lot of money and you're paying interest to the bank. These are the way that like these fundamental trading things happen, is that you're borrowing from someone. And then the thing is with crypto, it just gets super degen where it's like, yeah, I'm leveraging myself to the gills. And if it goes down 1%, then I lose everything that I have. Or you can provide more collateral, but if it goes up, you make a ton of money. But then all of this leverage completely distorts the real market.
But people aren't leveraging that much on there, like in making money. I think it's
exactly.
like people are investing in the altcoins and like finding the narrative and actually like investing in the right coins, and they're making money.
If you're like bullish or bearish, but if Ethereum or Bitcoin or whatever you're gambling on, just crabs. Crab is walking sideways
Yeah,
because the
so
crabs walk
I
sideways. The bulls, they
just
go up. The bears, they go down. But the crabs that go sideways, to
just like a heart
borrow
rate.
to borrow money, that to believe either that it's going to go up or down, you're taking on leverage where you're borrowing from someone and then you have to pay a percentage of the amount of money. The more that you borrow, the higher the percentage. So if you leverage yourself a lot, every day you lose a little bit of money to have the advantage of the leverage if it goes up or down, whichever side you bet. But the thing is, if it doesn't go anywhere, eventually your money disappears because it all goes into the interest of the person that lent it to you. So every day, if you're 100x leveraged, 5% disappears. And then when you don't have enough collateral, you can't keep your bet open. If Bitcoin goes up to 60,000 overnight and you're 100x leveraged, you can put $10. 100x is then what? $10,000. And then $10,000 at
Off of
20
100.
at 21,000 and it goes up to 60,000. So off of $100 bet, you have $10,000 bet at $20,000. So you have a half a Bitcoin. And if Bitcoin goes up to 60,000 and you sell, then you make 30,000
These are all in
minus the yeah. But that's if it goes up.
one-off scenarios.
Yes, but otherwise, every day a little bit of that $100, $5 is taken out because of the daily interest.
Yeah.
To hold that
fees.
Exactly, because you give them $100, but then they take interest on the loan that they gave you, but they'll give you $9,900 on your $100 bet. But they'll take $5, so you have 20 days for that bet to pay out, or else your money disappears and you get liquidated.
Yeah.
And then all the money that was going to perhaps buying the Bitcoin just goes to the bank.